Scott, I was just, looking at the years that you talked about, 2000, 2008, 2020, and now we're in 2024. Um, all those presidential election years, right? All those years and different things. How do you, I mean, we could talk about the charts and we could talk about the fundamentals. We could talk about the valuations, the S&Ps here, but I think that all these times, those were great buying opportunities, right? With the crises and everything. How do you like keep the geopolitical? I mean, we are at a point in our country and our world where you would think things are like you should be extremely bearish the way things are transpiring. And I think you know what I'm talking about. How do you separate all that when you know what kind of potential risks are out there?
Well, it depends on your account, depends on your risk, depends on your threshold. If I'm 51 years old and I have a 401k, then I put money in every single month as a chief strategic officer. I don't care. It'll help my average cost the same way the other crisis has happened. But as an active trader who trades for a living, if things start to get temperamental, like, you go back to the chart, before the 9% move lower, look at this candle on July 18th. We broke the 8-day moving average. We had a gap down that never got filled. So technically it said the market cares about whatever the narrative was then. And then we're below all the moving averages the whole way. Listen, the other presidential elections, the same thing happened. They said the world was going to end when Trump got elected. It was down that night and then never looked back. They said the world was going to end when Brexit happened. The world was always going to end, and it
Yeah.
doesn't end. You just need to know how much risk you have on. I tend to take more options when we get into areas that anything could happen, because risk is premium paid versus being caught in a mess that you can't control. So as traders, maybe you have a little less on because there's enough volatility that if you get paid for the month, you know you could short a huge gap up, and if it doesn't pull in, you could flip and buy them and use your charts. And if big gap down, you could do the other and you could make money tactically. So I would say when we get closer to these binary events, whatever they are, and it's going to probably be the election when we move closer. First one now will be the jobs report on Friday, because the street thinks we're still getting 1 basis point worth of cuts, and looks like we might get a quarter in September. And I don't think we can get 1 basis point unless, Tom Lee is now changing his gears and we're going to go down 6-7%. At 6-7% down in October, hey, maybe we go a quarter, then a half because of sentiment. Remember when we were down August 5th, what's his name on TV was crying for a 1 basis point cut that day, and we were still up 11% in the S&P. What the hell is that? So, I'm just thinking that, these binary events happen. You just have to know which account you're looking to focus on and what's in harm's way. But long term, it doesn't matter. Obviously everyone thinks like, I don't want capital gains taxes to go up. I've paid 50% all in a bunch of years. I want to keep more than half my money. So I'm capitalism, free enterprise. I like to help. I'd rather pick which charities I want to give to than them take my money and distribute it whichever way they want, whoever that is. But I'm not going to name names and get political.